Welcome back to another video on calculating Virginia child support. Today we are going to address how to calculate employment income. In most child support cases, the monthly gross income comes from employment income. Typically, employers compensate their employees on a salary basis or an hourly basis. Here we are going to take a deep dive into how to calculate gross monthly employment income based on salary and hourly compensation. This video will cover the following topics. First, we will go over how to calculate income based on the different types of pay periods, including weekly, bi-weekly, semi-monthly, quarterly, and annual periods. Next, we will go over how to calculate year-to-date and seasonal pay. We will then go over the ins and outs of hourly and salary pay and how to analyze pay stubs and W-2 statements. And finally, go over some tools to assist you in your calculations. So, you are asking yourself, what about the self-employed, unemployed, or underemployed parents? Don't worry, we will cover these topics in separate videos. So let's get started. Before we roll up our sleeves and sharpen our pencils to do the calculations, we need to address one lingering issue that creates errors all the time. It's not understanding the difference between biweekly and semi-monthly pay periods. Semi-monthly pay periods occur twice a month and biweekly pay periods occur every other week. Why does it matter? While with semi-monthly pay periods there are 24 pay periods in a year, with biweekly pay periods there are 26 pay periods in a year. If Arnold receives $650 semi-monthly and Peppa receives $650 biweekly, which employee would make more money annually? If you said Peppa, you would be right. There are 2 extra pay periods a year for biweekly pay. Instead of receiving 24 paychecks in a year, like Arnold receives, Peppa receives 26 paychecks a year. Now that we have cleared up the difference between biweekly pay periods and semi-monthly pay periods, let's get those pencils sharpened and start doing some deciphering. For weekly, biweekly, and semi-monthly pay period calculations, there is a 2-step process. First, calculate the annual pay and then using the annual pay amount, calculate the monthly earnings. For weekly pay periods, here is how the 2-step process works. Multiply the weekly pay amount by 52 to arrive at the annual earnings. Why would you multiply the weekly pay amount by 52? If you answer because there are 52 weeks in a year, you are correct. If Arnold made $650 per week, how much does he earn monthly? Step 1. Multiply $650 by 52, the number of pay periods in a year, to arrive at $33,800 annual earnings. Step 2. Divide $33,800 by 12 for the number of months in the year to arrive at Arnold's monthly gross income of $2,816.67. For biweekly pay periods, here is how the 2-step process works. Multiply the biweekly pay amount by 26 to arrive at the annual earnings. Why would you multiply the biweekly pay amount by 26? If you answer because there are 26 biweekly pay periods in a year, you are correct. If Peppa made $650 biweekly, how much does she earn monthly? Step 1. Multiply $650 by 26, the number of biweekly pay periods in a year, to arrive at $16,900 annual earnings. Step 2. Divide $16,900 annual earnings by 12 for the number of months in the year to arrive at Peppa's monthly gross income of $1,408.33. For semi-monthly pay periods, here is how the 2-step process works. Multiply the semi-monthly pay amount by 24 to arrive at the annual earnings. Why would you multiply the semi-monthly pay amount by 24? If you answer because there are 24 semi-monthly pay periods in a year, you are correct. Instead of Peppa's making $650 biweekly, she made $650 semi-monthly. How much does she earn monthly? Step 1. Multiply $650 by 24, the number of semi-monthly pay periods in a year, to arrive at $15,600 annual earnings. Step 2. Divide $15,600 annual earnings by 12 for the number of months in the year to arrive at Peppa's monthly gross income of $1,300. As you can see, Peppa's semi-monthly income is $108.33 less than her biweekly earnings. So, would Peppa rather be paid bi-weekly or semi-monthly if her rate of pay was $650 per pay period? Good answer, it would be more lucrative for her to be paid bi-weekly. Calculating monthly income from quarterly earnings, is dependent on the number of quarters you are using. Each quarter consists of earnings for 3 months. If you only had 1 quarter of earning for Arnold totaling $2,500, then you would just divide the $2,500 by 3 to arrive at his monthly earnings of $833.33. But what if Arnold had 2 quarters of earnings? For 1 quarter he earned $2,500 and the second quarter, he earned $3,500. Each of the 2 quarters consists of 3 months. We would add the 2 quarterly earning amounts together and divide by 6, the total number of months in 2 quarters. Adding $3,500 with $2,500 totals $6,000 earnings for 2 quarters. Divide $6,000 by 6, the number of months in 2 quarters, you arrive at $1,000 per month in earnings. If you had 3 quarters of earnings, how many months of earnings would you have? Correct, you would have 9 months and you would divide the 3 quarters of earnings by 9 to arrive at monthly earnings. What if you only had annual earnings? How would you calculate monthly earnings? Just divide the annual earnings by the number of months in a year, 12, to arrive at the monthly earnings. So, if Peppa made $81,500 annually, how much would her monthly earnings be? Yes, you got it. Her monthly earnings would be $6,791.67. These calculations assume that the pay period amount is the same every pay period. What if the pay period amounts fluctuate? How would you calculate the monthly employment income? This is where using the year-to-date amount could be used to calculate monthly earnings. Calculating the monthly earnings from year-to-date is a 4-step process. Step 1. Calculate the number of days from and including January 1st of the current year to the pay period's ending date to arrive at total days. Step 2. Divide the total number of days into the year-to-date pay amount to arrive at the per diem amount. Step 3. Multiply the per diem amount by the number of days in the year. For leap years, the number of days is 366, and otherwise the number of days is 365. Step 4. Divide the yearly amount by 12 to arrive at the monthly amount. If the parent began work after January 1st of the current year, then step 1 becomes calculate the number of days from, and including the start date to the pay period's ending date to arrive at the total number of days. Let's run through some examples to see how the year-to-date calculation works. If Arnold has been working at Smithfield Packing Company for the past 2 years and his last pay period ended on March 29, 2024, with a year-to-date earnings of $8,000, what would his monthly earnings be? Step 1. How many days from and including January 1st of 2024 to March 29, 2024, the pay period's ending date? 89 days. Why shouldn't the number be 88 days, which is the number of days between January 1st, 2024 and March 29, 2024? The reason being is that you are not counting the days between the 2 dates, rather you are counting all days during this time period, which includes both the first and last day of this time period. Step 2. How much is the per diem amount? By dividing 89 into $8,000, the year-to-date earnings, you arrive at $89.89 per diem. Step 3. What is the yearly amount of earnings? By multiplying $89.89, the per diem amount by 366 days for this leap year, you arrive at $32,899.74 annual earnings. Step 4. What is the monthly amount? By dividing $32,899.74 by 12, for 12 months in a year, you arrive at $2,741.65 monthly employment income. Note, depending on how you rounded the numbers, the answer may vary a little. Let's look at another scenario. Peppa started working at a local barbecue restaurant on March 16, 2023, and her last pay period ended on November 17, 2023 with a year-to-date earnings of $23,500. What would Peppa's monthly earnings be? Step 1. How many days for the time period beginning March 16, 2023, and ending November 17, 2023? One way to calculate this is figure out what day of the year is March 16, 2023, and what day of the year is November 17, 2023, and go from there. Here March 16, 2023 is the 75th day of the year, while November 17, 2023 is the 321st day of the year. Next, subtract 75 from 321 to arrive at 246. Is the answer 246? If you said no, you are correct. 246 days represents the difference between 321 and 75. It does not include the complete time period. To accurately represent the complete time period, just add one more day to the count. So here the number of days is 247. Step 2. By dividing 247 days into $23,500, the year-to-date earnings, you arrive at $95.14 per diem. Step 3. By multiplying the $95.14 by 365 days, the number of days of the 2023 year, you arrive at $34,726.10, the projected annual earnings for 2023. Step 4. By dividing $34,726.10, the projected annual earnings by 12, you arrive at monthly employment income of $2,893.84. Again, the amount might be a little off depending on how you rounded the numbers in the calculation. What happens if Arnold and Peppa's jobs are only seasonal? What do you do then? Seasonal work consists of the parent working less than 12 months of the year. To calculate monthly income for seasonal work, calculate the total annual earnings, and then amortize the annual amount over the year. It's a two-step process. Step 1. Multiply the pay period amount by the number of pay periods during the season to arrive at the total annual seasonal pay. Step 2. Divide the total seasonal pay by 12 to arrive at the monthly gross earnings for the seasonal work. What's up with Arnold now? Well, he is working at a local butcher shop during his summer school break, which consists of 10 weeks. He earns $375 per week. What is his seasonal monthly pay? Step 1. By multiplying $375, Arnold's weekly pay by 10, the number of weeks he worked during the summer, you arrive at $3,750. Step 2. By dividing $3,750 by 12, the number of months in a year, you arrive at $312.50, his monthly gross pay. Now that we covered the spectrum of how to calculate monthly gross earnings, let's talk about hourly and salary pay. Hourly employees only are paid for the hours they work. The employer determines the hours for an hourly employee each week. Virginia's minimum wage currently in the year 2024 is $12 per hour. If an hourly employee works more than 40 hours a week, he or she may be eligible for overtime pay. Overtime pay for hourly employees is the additional pay rate paid for working more than a specific number of hours in a week. The Department of Labor requires employers to pay their employees for working over 40 hours per week a minimum of 1.5 times their regular hourly rate. For example, an hourly employee making $20 an hour and working 45 hours a week would be paid $20 for 40 hours and $30 an hour for each of the 5 hours of overtime. If the parent's pay fluctuates, then you should consider calculating the monthly income based on year-to-date. Let's run through some scenarios. Scenario 1. Peppa makes $15 an hour and works 40 hours per week. What is her monthly earnings? By multiplying her $15 hourly wage by 40, the number of hours she works each week, you arrive at $600 per week. Next, to arrive at the annual earnings, multiply $600 by 52 for 52 weeks in the year to arrive at $31,200, her annual income. Finally, to arrive at her monthly earnings, divide the $31,200, her annual earnings, by 12, the number of months in a year, to arrive at $2,600, Peppa's monthly earnings. Scenario 2. Arnold makes $12 an hour for 50 hours a week. What is his monthly earnings? Since Arnold works over 40 hours a week, he is entitled to overtime, which is time and a half. Here it would be $18 per hour for 10 hours a week, totaling $180 per week. Step 1. Calculate annual earnings. Multiply $12 an hour by 40, the number of hours worked at $12 per hour to arrive at $480 per week. Add the $480 to the $180 in overtime Arnold makes weekly to arrive at $660 per week in weekly earnings. Now multiply the $660 weekly earnings by 52 to arrive at $34,320 annual earnings. Step 2. Calculate the monthly earnings by dividing 12, the number of months in a year, into $34,320. The annual earnings to arrive at $2,860 monthly earnings. A salaried employee is paid based on an annual amount. A salary is a regular predetermined amount of pay an employee receives each payday, not determined by the quality or quantity of the employee's work. This salary is divided between the pay periods, as determined by the company, for the year and based on a 2,080-hour year. If a salaried employee makes less than $684 per week, he or she is entitled to overtime pay. No matter whether you are dealing with hourly or salary earnings, it's best practice for the parents to provide a pay stub to verify proof of their earnings. Although there is not standard templates for pay stubs, they generally contain three components: an employee information section, an earnings section, and a deduction section. Within these three components, there is essential information to determine monthly gross earnings. In the employee information section, the pay period start date and pay period end date provide guidance on the pay cycle the employee is on, such as weekly, bi-weekly, semi-monthly, or monthly pay cycles. Here AAA Moving Storage pays Alvin monthly. Also, in calculating the monthly gross income from the year-to-date amount, the pay period end date is necessary element. The earnings section is the most important section of the pay stub for determining monthly income for child support purposes. Now, why would I say that? Why isn't deductions section just as important? If you answer because Virginia guidelines uses gross monthly pay for its calculations instead of net monthly pay, you are correct. The earnings section provides the pay description such as regular hourly rate versus overtime hourly rate, and includes additional pays such as bonuses. Also, it contains year-to-date earnings. Here, Alvin worked 176 hours in August 2023 at his regular hourly pay rate, which is $24, to have made $4,224 for this pay period. In addition, he worked 12 hours of overtime at a rate of $40 per hour, totaling $480. Is the $40 standard overtime? No, it is not. The standard 1.5 times Alvin's regular rate of pay would be $36 per hour. Alvin's overtime is above the minimum standards set by the United States Department of Labor. Lastly, Alvin received a $250 bonus. His total monthly earnings for August 2023 is $4,954, and his monthly gross earnings calculated from his year-to-date earnings is $5,263.96. Which should you use, the actual earnings or year-to-date earnings, to calculate monthly gross earnings? The analysis should start with using the current earnings. If there is a significant difference between the two, then further inquiry is required to explain the difference. It would not hurt to run the guidelines using both to see what the outcomes are. Typically, the monthly support amount between the two are negligible. The third component is the deduction section. The deduction section contains two types of deductions: mandatory and voluntary deductions. The mandatory deductions include federal and state taxes, Medicare and Social Security taxes, and can include garnishments such as child support wage withholdings. The voluntary deductions, as the word suggests, depends on what the employee has elected to deduct from his or her paycheck. Here, Alvin has elected a health insurance deduction and to pay a loan. None of Alvin's deductions are relevant in determining gross monthly earnings for child support purposes. There may be instances where the parents document their earnings with a W-2 form. The W-2 is completed by the employer to indicate earnings from the prior year. It summarizes the employee's earnings and tax withholdings. Use Field 3's Social Security wages to assist in determining monthly gross earnings. Field 1's wages and tips amount do not include non-taxable retirement contributions. Non-taxable retirement contributions are included as income for child support purposes. In this example, what is John Doe's monthly gross earnings for the 2017 tax year? The answer is $4,166.67. Divide $50,000 by 12 to arrive at $4,166.67. For assistance, download the Employment Income Calculator, which will calculate monthly gross employment income from salary, hourly, or year-to-date earnings. Just enter the basic information into the yellow fields that is obtainable from pay stubs, W-2 forms, or the parties, and the calculator will do the rest. The Monthly Gross Employment Calculator is an Excel workbook made up of 3 worksheets. There is a salary, hourly, and a year-to-date worksheet. To maneuver between the worksheets, Just click on the tab containing the heading you want to go to. Here we will cycle through the 3 worksheets. Let's take a look at the salary calculator, which takes 2 inputs. The first input is selecting which pay period type. The options include weekly, bi-weekly, semi-monthly, quarterly, and annually. The second input requires you to insert the amount of gross earnings made during the pay period. The child support calculator shall do the rest. Here, the parent is paid bi-weekly and receives $2,750 per pay period. The calculator figures that the parent's monthly gross earnings is $5,958.33. Let's take a look at the hourly earnings calculators. Here we have 2 calculators. The first calculator deals with regular hourly pay, and the second calculator deals with both regular pay and overtime pay. Each one requires the same 3 inputs, which are the hourly rate, the pay period type, and the number of hours worked each pay period. For regular pay, the parent makes $15 an hour and works 40 hours per week. Her total earnings are $2,600. In the overtime calculator, the only input that changes is that she works 55 hours a week instead of 40 hours. Because she works over 40 hours, she is paid time and a half or $22.50 an hour for 15 hours a week. Her total gross monthly earnings is $4,062.50. Before moving on to year-to-date pay, let's see how the seasonal earnings calculator works. Here there are also 3 inputs, either monthly or weekly pay periods, the amount of money paid for each pay period, and the number of months or weeks worked during the season. Here, the parent works 10 weeks during the summer, making $350 per week, which amortized over 12 months, equals $291.67 per month in seasonal earnings. We are now ready to move on to year-to-date calculations. Click on the Year-to-Date tab. The Year-to-Date worksheet is divided into 2 sections. The first section allows you to manually select the number of days a specific date falls on. For example, June 15, 2026 falls on the 167th day of the year. Here we go down on the 2026 column until we find June 15, 2026, and next find the corresponding number, which is 167. Divide this number into the year-to-date amount to arrive at the per diem. The second section allows you to calculate the monthly gross earnings from year-to-date earnings. In most cases, you will need to only input 2 fields, which are the pay period ending date and the year-to-date amount. Otherwise, if employment began after the beginning of the calendar year, you will also need to insert the start date. In this example, the pay period end date is May 15, 2024, and the year-to-date amount is $23,500. May 15, 2024 falls on the 136th day of the year, and the monthly gross earnings are $5,270.22. Well, we covered all the topics for this video, so let's recap. It's important to remember the difference between the number of biweekly pay periods in a year, which is 26, and semi-monthly pay periods, which is 24. When the parent's wages fluctuates from paycheck to paycheck, use year-to-date pay calculations to arrive at monthly gross earnings. For seasonal pay, calculate the gross annual pay amount, and then divide by 12 to arrive at the monthly gross earnings. Turning to pay stubs, Virginia child support laws require you to use total earnings, and not net earnings, in calculating monthly gross income, and for W-2s, use Social Security wages to calculate monthly gross income. Because Social Security wages include both taxable and non-taxable income. Hope you enjoyed this video on calculating employment income for Virginia child support, and have a nice day.